Welcome all my friends and to the program of corporate tax planning. Today, my friends, in this session, we will have a discussion on the mandatory statutory requirement of filing of income tax return and the procedures thereof. To start with this discussion, let's understand what is the income tax return. Then, who are required to file this return? Then third, why the return need to be filed? Fourth, what are the process and procedures? Fifth, whether there is any possibility to change, to amend, to include or delete whatever I have already included, that means the modifications, whether this is possible or not. And then finally, if I fail to do that, what are the steps that the authority may initiate against me for the purposes of non-filing of such return? So let's start with the beginning. Let's understand what is the income tax return. Return is a statement with giving details of all my income that I have earned during the year. So might be I am earning income from salary or from house property or from business profession and gains. Then capital gains, other sources. So any of the category of income, first need to understand what is the total income thereof. Then how much deduction I am claiming, how much deduction I am eligible, and the deductions that are eligible, like I made some donations for which I am eligible to get a deduction under 80G. I contributed some amount to certain medical insurance scheme for myself as well as my family members, dependent family members, for which I am eligible to get a deduction under section 80D, DD, DDA, all these sections. So whichever, or if it is a company, if it is a corporate, then the corporate has set up a new manufacturing plant at a backward state or a backward district, eligible for a deduction under section 80IA or 80IB, something that like. So the total income reduced by the deductions, reduced by the claims, becomes my taxable income. On the taxable income, the income tax liability is calculated based on the rate applicable. What is rate applicable? Like if it is a business income from business, the rate is 30%. And if the same company earns a dividend from a domestic company, that means Unilever Limited getting a dividend from ITC Limited, the tax for the recipient becomes a lower rate or a zero rate, and all put together the net tax liability that's determined, right, now need to be deposited to the government account. In our two earlier session, we have discussed about advance payment of tax. We also had discussed about the concept of TDS, tax deduction at source. These two ultimately results into a payment of taxes to the government account. After all these things, if anything remains, any balance amount remains, the balance amount to be deposited by the recipient of the money, by the assessee to the central government account called as self-assessment tax payment. Once all these payments are being made, that means your tax liability just equals with your tax payment. Now you need to submit a return, a detailed statement showing all income, all deduction, all liability and all payment in one piece of paper or a multiple piece of paper. That's called income tax return. Section 139 of the Income Tax Act, subsection 1, it says it makes a mandatory that every person who has a total income that exceeds the exemption limit, that means if my exemption limit is more than 2,50,000 and if my income is say 5 lakhs, I am mandatorily required to furnish an income tax return within the due date. Now, what is the due date? The due date is different for different category of assessees. Like for the individuals, it is somewhere in the month of June, sometime in month of July. It depends on the notification issued by the government. For the companies who require to get their accounts audited by the chartered accountant under section 44AB of the Income Tax Act, called as tax audit, then it is 30th of September. Again, companies whose accounts is audited and they are also subject to transfer pricing audit, then 30th of November. Different due dates are there. But today, right now, we will be discussing only on the idea that if it is a partnership firm, if it is a company, whether their accounts needs to be audited or not. If it is an ordinary normal individual, a salaried employee whose accounts need not to be audited, it depends on the situation. The due date always becomes different. That sometimes undergo changes because of the government notifications, but by and large it starts from 30th of June and ends by 30th of November. By 30th of November, all the returns on a time to time is getting submitted. Now, what's been told in the law, in the statute? The statute says that a return has to be submitted by, in case of individual, then the individual himself or herself has to submit it. In case of a company, the managing director or a director authorized need to be submitted, because today everything is absolutely online, everything is digitally signed, everything is the PAN based, and a digital signature should be of that person who is like in case of individual, the individual concerned. In case of a firm, the managing partner of the firm. In case of a company, the managing director of the company need to sign the return. There may be a question that if a company or a business, right, or if there is an individual who is carrying out a business suffering with a loss, like I am an individual and I am in my business, I have suffered loss. This year there is no profit, I have suffered a loss. Till I require to file an income tax return, because everybody says income tax arises if there is an income. If there is a loss to an individual or to a company, do they require to file a return? Section 139 subsection 3 says that it is required. Why? Because if it is a loss in the business, I can carry forward the loss for subsequent 8 years. And within the next 8 years, if I find there is an income, I can always adjust it with that carry forward of losses. So this entire opportunity of adjustment of the carry forward is only possible if I file a return. So the filing of return is mandatory even in case of loss, and it arises in so many situations, like I had a property, I sold the property. The capital gains has been computed in such a way, due to the indexation, I ultimately land up into a situation of a loss, computed business loss or a capital gains loss. So I can always take a call, boss, this is a loss, I should not file a return. But the law says, no sir, you need to file a return, otherwise your eligibility to carry forward the loss is lost. You cannot carry forward it. The due date is over. So the due date was, for me, the due date was 30th of September 2018. And the due date is over. Can I file the income tax return? Law again gives me a help. Law says, yes sir, you can do it. And you can file a belated return or delayed return, late filing of income tax under section 139 subsection 4. And what it says a taxpayer have to furnish the return before the due date as specified in 139(1). Very correct. But if he fails to do that, to file the return, then within the expiry, he can file the return at any time until the expiry of 1 year that started from the end of the applicable year of assessment or before conclusion of the assessment. He can file a delayed return. I repeat the situation once again. 30th of September 2018 is the due date. 31st March 2019 is the end of the financial year. I submitted a return or I never submitted a return, and then I want to file a return thereof for the financial year 2017-18. Can I do? Answer says yes, you can do. You have to invoke a delayed return section called as 139 subsection 4, and what the law says? The law says that any time until expiry of 1 year that started from the end of the applicable year of assessment. So within next 1 year of assessment, you can revise the return, or if the assessment is getting closed, then sir, you cannot revise the return. 139(5) says revised return. What is revised return? I submitted a return and I find certain thing I have missed out. Certain claims I forgotten to claim. Certain deductions I forgotten to consider, or certain income escaped. I never able to put it into the return and disclose it to the government. Do I have any opportunity to revise my scheme, my return? Answer says yes. 139 subsection 5 give me that opportunity. It says, sir, you can revise your return. That means you have submitted a return. That return you are now going to revise it. How? How you can revise it? The law says no problem, sir. You invoke your original return and then make the changes, but there is only one part. The part is the time limit. Right? What it says? It says that the corrective return has to be filed before completion of the return of the assessment itself. Right? Could be done. That means if the assessment gets completed, sir, you cannot change the return. That means your opportunity of filing the reverse return is lost. There may be a situation. Where the return is defective. That means something wrong, something incorrect thing. Defective, it's not properly signed, it is not proper things being incorporated, and the assessing officer has given you an intimation telling that within 10 days or within 15 days maximum you rectify the defect, and if you do not rectify the defect, we will understand that you are not interested in filing the return. If you now rectify the return that you have already submitted and place a proper correct return, is covered under section 139 subsection 9, and that shows that it's a correction of a defective return. There may be only one or two situations that remains in our discussion for this particular session. Number of forms are there: ITR 1, ITR 2, ITR 4, 5. Applicable to different category of assessees, different types. Like ITR 1 is very common form, commonly used by the common person, where you have got salary, house property, and some amount of capital gains or other sources, interest income. And ITR 2, 3, 4 are applicable as the case may be from time to time for different category of assessees. Very, very correct. There is only one issue that remains today with all of us for discussion. If the assessing officer find that the assessee is liable for filing of return statutorily, but he has not filed, the assessing officer may call upon by issuing a notice telling him that you please file a return. The assessee is now statutorily required to file the return. That also is a filing of return under the provisions of Income Tax Act. So my friends, towards conclusion of this session, what I like to say, that return is basically a summary of all my income, deduction, net liability, payment, everything, put it into one bowl, and the starting point of the assessment and appeal examination on the part of the department.